Hi, everyone, and welcome to Big Business This Week here on Cheddar, your go-to source for in-depth analysis of the week's most impactful news stories. And we start, of course, with a pair of devastating hurricanes slamming the southeast and leaving disaster in their wake. More questions about the economic impact of these increasingly dangerous storms and of climate change. Chris Lafakis is the Director of Analytics and Climate Economist at Moody's. He joins us now on Big Business This Week. Good to see you, sir. We are not by any means, and neither is Moody's, making light of the loss of life and the safety of Americans. We are a business program. So with that being said, it's tough to get a real sense of Milton's impact right now. We're just seeing it. But estimates that Helene caused nearly $50 billion in property damages alone. What do you make of the many estimates all over the place about the immediate impact of these storms?
Well, we know that Hurricane Milton had Category 5 wind speeds at one point, and it made landfall as a Category 3 hurricane. There are millions without power. Schools are undoubtedly affected as well. And so whenever you get such widespread power loss, out-migration, because many millions have evacuated the central Florida area, you're going to have an economic impact. What that means is store closures, people either not going to work or their businesses being closed, kids out of school, no power, and that disrupts the economy because ultimately GDP is measuring the value of all the goods and services that we produce. And to the extent that we are not able to go to work, that has a measurable GDP impact. And that's not even taking into consideration all of the damage that has been inflicted on properties, commercial, residential, real estate, building contents, automobiles, all the damage to public infrastructure as well. So this is going to be a storm that takes a long time to recover from. We're probably going to need to pass supplemental legislation at the federal level to provide assistance to both individuals and businesses and rebuild some of the infrastructure that was damaged during the storm.
Yeah, it's a good point about loss of employment. You're talking about 3 million Americans right now in Florida without power. Needless to say, probably not going to work. You mentioned property damage. That is the number that grabs the headline. But what else needs to be factored in here that may not gain as much attention, whether it's short or long term?
Sure. You have the immediate economic impact, and that is felt through inability to work because of power loss, because of rampant flooding, which will close establishments and damage infrastructure. And that impact is going to be felt now immediately, and it will show up in fourth quarter GDP for the Central Florida area. What I'm concerned about is the longer term impact of this storm on the insurance market. We had a very bad hurricane season in 2004 in Florida. We had another bad hurricane season in 2005. And in the aftermath of those two hurricane seasons, Citizens Property Group, which is kind of a state-backed insurer of last resort, at least that's what it was intended to be, it has become an increasingly large player in the Florida insurance market because it's become more difficult for private insurers to profitably underwrite insurance in Florida. That entity had to issue an assessment to all property and casualty policies in the state of Florida that was 1.4% of the size of the premiums. It was reduced to then 1% and discontinued a little bit early. That was supposed to take effect for 10 years. And on top of that, the homeowner insurance premiums rose by 53% over a 5-year period in the aftermath of that very bad hurricane season. So I'm concerned, number one, how high are insurance premiums going to go whenever underwriters produce, they underwrite new policies for the next period. These are annual policies. That's kind of concern number one. Concern number two is, will Citizens need to issue another assessment like it did in 2007 in response to the 04-05 hurricane seasons? I think not. at this point, although we'll have to see how this plays out. And then the third concern is the Florida Hurricane Catastrophe Fund. That is a state fund that is intended to backstop insurers, provides reinsurance for primary insurers, and its maximum potential liability is $17 billion. And it doesn't have the capacity to pay out that amount of claims. So if we get into a situation where it is forced to pay out over $10 billion in claims, it would potentially have to issue debt and issue an assessment on all property and casualty policies in order to create the revenue stream needed to service that debt. So I think that is a very big concern, and the private insurance market and what happens to premiums is a very big concern, because any increase in insurance costs raises the cost of home ownership. It makes housing less affordable, and it causes a disincentive to housing demand.
An already collapsing market further threatened. So NOAA says 28 separate billion-dollar weather and climate disasters occurred in 2023, nearly $93 billion in damages. Are these massive and dangerous storms becoming more frequent, or are they just getting more news coverage?
Well, there's no question that they're becoming more frequent. Number one, because obviously today's dollars are, different, worth less than prior dollars because of inflation. So the numbers will naturally escalate because we have inflation that's 2% a year in normal times, and we've had a period of rapid inflation because of a number of factors, COVID, Russia, a number of factors that have plagued the economy in recent years. But also, the temperature level continues to increase. And as a result, warmer waters make it more easier for hurricanes to reach Category 5 wind speeds and potentially impact the Gulf Coast and Florida economies. And so I would say over 15 of the largest 20 disasters have occurred in just the past 20 years. So it's not just that they're getting more media coverage. More high power storms are being generated and are making their way onto U.S. soil.
And to that point, Milton, the third hurricane hit Florida this year, two of the strongest storms ever in the Gulf in the last month. Florida's economy has boomed since COVID, but the Wall Street Journal writes this week, the great Florida migration is coming undone. How down the line could Florida's economy be severely impacted?
Well, that's the concern that I have, is if you have, and especially if the Florida Hurricane Catastrophe Fund gets into trouble, then assessments might need to be issued. Private insurance premiums are going to go up regardless. And so the concern is that housing will become less affordable because insurance premiums are already, Florida is the fourth highest state in terms of homeowner insurance premiums in the entire U.S. That housing simply becomes unaffordable and it becomes less attractive as a migration destination. And without population growth, I mean, that's half of economic activities. Population growth and productivity growth. And the sum of those equals overall economic growth. And so if you're losing some of that population engine in Florida, then the economy slows down.
I want to thank the Director of Analytics and Climate Economist at Moody's, Chris Lafakis. Thanks so much, sir. Coming up, we'll discuss the impact on Florida's once hot real estate market. Might this post-COVID migration reverse in the years to come? Millions of Americans flew south during and after COVID, coveting warm weather, low prices, and an ideal remote work and/or retirement conditions. Real estate markets, including Florida, North and South Carolina, surging to record highs. But will back-to-back devastating hurricanes reverse the migration and leave a real estate carnage across the Southeast? Jason Alim is the Chief of Real Estate Services at Redfin. He joins us now. Good to see you, Jason. So here are some of the headlines that I'm seeing about Florida real estate just this morning. Florida housing market crumbles. The great Florida migration coming undone. Florida housing markets on the verge of a crash. Are these clickbait or are these reality?
There's a little reality in there, but first off, thanks for having me, Dave. I want to give my condolences and my support to the people of Florida and the Southeast that are experiencing and bracing for Milton and obviously kind of recovering still from Helene. There are things happening in the Southeast that are really tough to understand and really hard to figure out what direction the market's going to go. But it's clear people are deciding to not move to that part of the country as much. Right now, you've got a lot of these homes that are coming off of the market. You have a lot of people deciding that there's too much risk there. Especially young people are looking there. About 32% of young people are saying, I'm not quite sure about moving to the Southeast anymore. Your people that are above 35, mostly are comfortable with still being there. And the people that live in the South, they're rethinking it a little bit, but they're still comfortable with that part of the market. So we're watching what's happening right now.
Yeah, and I'm glad you said that, Jason. We are not trying to trivialize the impacts of a disastrous hurricane. The health and safety of American lives is of utmost importance to Jason, to us here as well. We are a business news program. So what are you seeing in terms of price reductions and inventory coming back on the market, whether it's Florida or those other states I mentioned, South, North Carolina?
Yeah, you hit it on the head. Things are changing in those markets. When you look at the Sun Belt market, you saw an amazing rise over the last several years where people migrated to that part of the country. And right now, you're starting to see that change. You're starting to see that swing back in the other direction. Lots of price drops. Now, the thing that's interesting here is that because there's more inventory and you're seeing changes in interest rates, you're actually starting to see more affordability in these parts of the market. And you're starting to see more activity in some of these parts of the market as well. When you look at the overall market and you say, what's going on with buyers? Our Redfin Home Buying Index has things busier for 9% up month over month, which is good to see. We hope that obviously things do well in the Southeast and Florida, but things are still starting to recover from years of tough inventory and very competitive market.
You don't sound overly concerned about the impact of all these storms in terms of really the long-term prospects for the real estate. The early estimates suggest nearly 50 billion in property damage. That likely doubles to 9 figures with Milton. What will be the long-term impact, 5, 10 years from now, on the Florida housing market?
Yeah, so let's be clear. I am very concerned about what's going to happen in Florida. We can't project what's going to happen 5, 10 years out from now, but I can tell you right now, in the middle of this, you have deals that are breaking apart, people that are deciding to unlist their homes, people that are deciding to wait. A lot of those markets are going to be shut down for the next several months. Right now, we're trying to figure out exactly how to navigate that. Me and my team have talked about how our insurance premium is going to impact that part of the country. Will you still be able to transact real estate in the same ways that we have before? We think we'll be able to navigate that, but there are a lot of unknowns when you look at this type of climate change and the kind of risk and destruction that we're seeing in that part of the country.
I'm really glad you brought up insurance. It might be a bigger problem than the storms themselves. Premiums increased 50% for many there, and in some cases, 400% over the last 5 years. A Florida Representative Spencer Roach says, quote, the property market could collapse and legislators will have to prop these insurance companies back up and go back to the drawing board. How dire is the insurance market in the state of Florida?
Yeah, it's very tough. We've heard the stories, and this is almost a coast to coast problem when you think about what we were seeing in California with the fires just, within 6 months. And then you swing to the other part of the country and you see climate change having an impact in Florida as well. And we do need to figure out answers here. Obviously, the insurance companies are going to want to run a profitable business, and they're going to make their decisions on how they're able to support these parts of the country. I do not think that it's going to be a complete collapse. Most of the times, these parts of the country have been very resilient, and the market has solved these issues. So I am not in a place where I'm ready to say, real estate's going to fall off the face of the earth in that part of the country, and we're not going to solve that problem. I think it will actually solve that problem.
Completing the trifecta of really bad news for coastal homeowners down there is new legislation in the wake of these hurricanes that forces condo owners all over the state to pay massive special assessments. Now, it's for their safety. This is a result of Florida legislation, but many are having to sell their condos, apartments, because they simply can't afford it. Are you seeing lots of those price reductions and homes going back up on the market because of that?
Yeah, you hit it on the head. So we've talked about the real estate market in general in the Southeast and in Florida, and we didn't even kind of split it out between single family homes and condos. And the situation is much more dire. You're seeing a lot of those homes starting to sit on the market a lot longer and increase in that inventory. And it's partly due to the insurance rates, but it's also due to the HOA rules and the assessments there. So that is going to be a really tough one to navigate because at this point, you've got people that can't sell their homes and you have investors backing out of that part of the market as well. So we'll have to see how this plays out, but I do expect we'll see a pretty steep price correction in that part of the country,
I,
especially with.
Jason, I hear a lot around these parts, around New York, people saying, hey, it's a great time to buy down there in Florida. Is it?
I think you have to look at your personal situation and understand what you want to accomplish as a homeowner or an investor. We do have more affordability. I kind of go back to the number I quoted earlier about our home buyer index and that being up 9% month over month. So people are getting busier in the market. More inventory means that you might not have as many of the competitive offer situations. And you might need to just make a decision. Is this a long-term investment for me or is this a short-term horizon? So I always say that when you make these decisions, it's a combination between a financial decision and a lifestyle decision. And you've got to figure out the right balance on how you want to approach that situation. So the idea that people aren't going to still transact real estate in Florida right now, that's just not true. That is still going to happen. But some people are going to sit on the sidelines and decide, hey, where do I really want to be financially 5, 10 years from now? Let me see how this plays out over the next several months and then make a decision from there.
I'd be remiss if I didn't ask about the rest of the country. How have you seen the impact of interest rates bring down mortgage rates? Is it thawing out that frozen market? And how low do you think rates will have to get to really get buyers and sellers off the sideline and get some activity going nationwide?
Yeah, totally. So I do think things are thawing out. If you were to just go back, call it 3 to 6 months, we'd be in the 7 to 7.5 range on rates. Right now, we're kind of oscillating between the low sixes and the mid sixes. And you're seeing that in that home buyer index starting to increase, people being more active on the market in regards to touring, in regards to making offers. Us as a company, we're preparing for next year in regards to an increase in the amount of sales that happen in the market. If you look at the data here recently, out of 1,000 homes, only about 25 of them have been on the market and selling. And that is crazy when you think about the percentage of homes that are available in the market. We think that number is going to increase. It won't go back to the highs that we saw during the pandemic times, around 40 out of 1,000, but we do think we'll fall somewhere in between that moving forward. So I think we're on the move back in the right direction. When you ask where do the rates need to get, I'd love to see rates start to settle in the high 5s to 6s, but I think we're a ways from that. A lot of the Fed, reductions, I think were priced into interest rates.
Yeah.
And we're going to have some time. We're going to go on a little bit of a journey before we get closer to the 6% range. I do think once we get in the low 6s, high 5s, it's easier for people to make that decision. There's still a tough financial decision for people that are rate locked into 3% rates, high 2s, 4%. But at a certain time, life comes calling. You need that extra room. You've got this new job. You've got this new thing that you want to move to, and people decide to make that decision. And even beyond that, you have people that are entering the market that still want home ownership and still want to build wealth. They'll make those decisions even in the low 6s, and they're making it now in the mid 6s and high 6s.
Probably talking about a 2026 factor there. All right, Jason Helene, the Chief of Real Estate Services at Redfin. Thanks so much, man. Appreciate it.
Thanks, Dave. Have a good day.
You too. Welcome back to Big Business This Week. Let's bring in the author of our newsletter of the same name, Peter Green. Peter, good to see you. Let's start with Google. The DOJ considering asking a judge, we're good, man, asking a judge to break them up. What are we learning?
Well, the DOJ brought a case against Google earlier this year, and Judge Amit Mehta in California said, yeah, in fact, they have built an illegal monopoly on search by crowding everyone else out, doing things from paying Apple to make Google the default search engine on the iPhone, which is a big deal, to all kinds of other ways that they are keeping competitors from having a foothold in the search business. So now the question is, what do you do about it? Google has something like 90% of search traffic in the world, even more than 90%. I mean, nobody comes even close. So what do? And the options on the table are you could force them to open up the black box with all their data, or you could possibly force them just to put the search function into a new company and spin that off. Maybe the entire Chrome business would be spun off from Alphabet. I'm sure Google would still maintain some ownership stake in it, so it might not be that big a hit, but that's one of the things they're proposing.
Very interesting. Couple of things I might add there. That may hurt Apple more than Google because they get a lot of money, Apple does, from Google. And most people think if Google's broken up, it won't actually hurt the company. They may actually be worth more money. And as far as search goes, Peter, a lot of the young people are actually using social media and TikTok to search. So that is another threat to them, isn't it?
It is. And one of the things Google's attorneys are responding is they're under such threat with AI search from things like ChatGPT or Proximity that breaking them up now could really hurt their business because this AI search is taking over the traditional ranked searching based on SEO terms. So, yeah, Google's in a hole. Apple, they're still really a hardware company with this fantastic operating system. But yeah, they did take in more than $20 billion last year from Google just for making the search engine number one. What they do, it's not a straight out payment. It's a percentage of the ads that come from the results. But yeah, it's a big deal.
And based on the stock, it doesn't look like investors are concerned. Google continues up 16% year to date. Wouldn't be a week here without more Boeing turbulence. Negotiations with their machinists not going so well. Where are we at?
Neither side wants to talk to the other right now. The machinists say that the 30% pay rise offer on the table isn't enough, especially when a lot of them live in the very, very expensive city of Seattle in that area. They also want guarantees that automation's not going to put too many workers out of jobs. And they want to see more changes to the corporate culture so that there are fewer safety issues. They take a lot of pride in what they're doing. The airline is saying, we just can't keep giving in and we don't have that much money. Right now, Boeing is bleeding cash. The strike's costing them about $1 billion a month. They've led the first 6 months of this year more than $8 billion cash because of the 737 slowdown and various other issues that they've been having. I don't know how they're going to resolve this, but at some point, either the president can say this is a strategic industry and force the workers back to the factory floor, or Boeing is just going to have to bend over and say, okay, you get your money.
It's just been one disaster after another for Boeing. Unlike Google, their stock continues to crash, down 40% year to date. Their new CEO, Kelly Ortberg, surely has his hands full. Oof. Our thanks to Peter Green. Make sure you subscribe to our newsletter, Big Business This Week, by signing up at cheddar.com/BBTW. That's going to do it for us this week. More Cheddar up next.